This is the Syndicate Room, an AI-generated podcast from AdValorem Syndicate. Everything about this show, the voices, the scripts, the production, is created by artificial intelligence. We believe AI content should always be clearly labeled.
And if you're hearing this while driving, cooking, or doom-scrolling secondaries prices at 2 a.m., welcome! Educational content only. No investment advice, no offers, no solicitations. Just markets, tech, and the occasional hot take.
Today, Agentic AI mega rounds, the pre-IPO Mega-IPO wave, and why litigation finance is getting weirdly mature. Plus, we'll plug what we cover at gp.advalorem.io, daily research, an education library, and community events.
And we've got an interest list for community dinners. No pressure, just humans eating food, talking markets. Discord is discord.gg/GERGTP9GTS. And the community application is tidycal.com/advalorem/syndicate. There, I said the URLs. Haha.
Let's start with the vibe shift in venture funding. Everything is agentic now. If your startup can't say agentic workflow automation with a straight face, do you even exist?
Brian, stop. It's not a vibe shift, it's a vocabulary bubble. I swear half these pitch decks are just the word agent copy-pasted until the PDF hits 40 pages.
Okay, fair, but money is moving. AlleyWatch's weekly report had about $1.7 billion in notable rounds, and a ton of them were described as agentic or AI first. Things like Rogo in finance workflows, High Touch in marketing, Parallel doing open web tooling, and Scout AI in defense robotics.
Defense robotics is the plot twist. Like, we went from AI writes your emails to AI drives your unmanned platform. That is a different kind of product market fit.
And then you've got space and defense-adjacent capital still flowing. True Anomaly was listed at $600 million. The takeaway isn't the exact list. It's that the buyer persona is expanding. Not just SaaS teams, but governments, primes, and mission-critical operators.
Right. If the customer is a procurement office with a 14-month cycle, the growth story changes. It's less viral loop and more compliance loop.
Compliance loop is brutal, and it tees up what we cover at AdValorem. We're not just following funding headlines. We do AI robotics research as a theme. What's real capability versus demo magic?
And we do quantum pre-IPO analysis, which is basically, can quantum companies survive long enough to become boring? Because boring is what you need for the public markets.
Speaking of public markets, pre-IPO and secondaries. There's been a lot of talk that the next year could bring a mega-IPO wave featuring names like SpaceX, OpenAI, and Anthropic.
The secondaries market has turned into a popularity contest. If you're not in the top 5 names, you're basically a private company with feelings.
Yahoo Finance cited a PitchBook estimate that those three could collectively generate over $100 billion in proceeds. And it floated SpaceX, aiming for around a $1.5 trillion valuation with a mid-2026 debut.
Casual trillion, just a normal number that humans say now.
Here's the real question. If these huge, heavily traded private names go public, what happens to private liquidity? Does the secondaries market get healthier, or does it lose the only tickers anyone actually trades?
I think it gets healthier long-term, but messy short-term. You lose the index effect, where everyone benchmarks to SpaceX prints. But you might finally force price discovery for the long tail.
And you change the narrative from private forever to private until it's inconvenient. A lot of companies stayed private because capital was cheap and scrutiny was annoying.
Also because the public markets were in a mood. Let's not pretend founders just love 409A spreadsheets.
True, but if the IPO window stays open, employees get liquidity, early investors get exits, and the pre-IPO market might stop being a museum of paper wealth.
Museum of Paper Wealth is the most accurate description of late-stage private I've ever heard.
Now let's pivot to litigation finance, because this is where alternative investments start sounding like a thriller novel.
Yes, finally. Courtroom drama with spreadsheets.
GLS Capital's 2026 Trends Write-Up talks about appellate monetization funding, basically monetizing part of a successful verdict while appeal risk still exists.
So you're saying, you win, but you don't want to wait, so you sell a slice of the upside to get paid now. That is the I have anxiety trade.
Exactly, and GLS points out a driver. Judgment preservation insurance has gotten less available in some contexts, so capital structures are adjusting.
Here's what's fascinating. This is the same pattern as venture. When one risk transfer product dries up, a new financing structure grows to fill the gap.
And regulation is creeping in. GLS mentions ongoing disclosure debates and even a proposed federal approach last year that would have imposed a big tax on litigation proceeds. Didn't pass, but it signals attention.
Transparency is the paradox. Institutions want it, but participants fear it changes strategy. You want sunlight until you realize sunlight also reveals your playbook.
This is where AdValorem's education verticals come in. We've done a new chip warrant case study as education, how warrants work, what enforcement looks like, and why it matters to founders and early investors.
And we cover accelerator warrant enforcement education, again, education. It's not a pitch. It's explaining the mechanics, how rights get structured, what happens when timelines slip, and why legal language is basically financial engineering in a trench coat.
Financial engineering in a trench coat. Put that on a t-shirt.
We can sell it for, no, wait, compliance. We can give it away.
Quick lightning round. If you had to pick one theme tying today together, Agentic mega rounds, Mega-IPOs, and litigation finance transparency, what is it?
The theme is, markets are trying to price uncertainty with better wrappers. AI gets wrapped in agents. Private equity-ish growth gets wrapped in secondaries and IPOs. Legal outcomes get wrapped in monetization and disclosure.
That's good. My version. We're watching the financial system invent new pipes in real time.
And every new pipe leaks for the first year. So, read the docs.
If you want the daily notes and the longer write-ups, head to gp.advalorem.io. There's an education library at gp.advalorem.io/#education and daily insights at gp.advalorem.io/insights/.
Join the Discord at discord.gg/GERGTP9GTS. And if you want to get on the interest list for community dinners, use the community application link, tidycal.com/advalorem/syndicate. And yes, Substack too, advalorem.substack.com.
All right, signing off. This has been the Syndicate Room. Next episode drops Monday. And reminder, this entire podcast is AI generated. Voices, script, production, clearly labeled educational only.
See you next time. And please, for the love of liquidity, stop calling everything agentic unless it actually does something.